Day morning on the 10th of March, we're going to be looking at the question of, is this the bottom of Bitcoin's price as we might suspect, or is there further downside? These are great questions. We're also going to, for the rest of the podcast after that, podcast, show, whatever you want to call it, we're going to take a look at the S&P 500, the Dow Jones, and some of the things that are taking place in the normal markets. I believe it is important to keep a very close eye on these. Boom. So we were watching something yesterday in the private bear den that I think is important to keep an eye on when trading and learning. Again, understanding the sentiment of being a student always, I think, is very important. What we saw yesterday was a pattern we hadn't seen in a while, and it's known as a descending broadening wedge. It's actually the opposite of a descending wedge itself. So we'll actually show both of these here as they fit on one screen. So one's bullish, one's bearish. So here we saw an ascending wedge and tightening descending wedge as well on the up price. Now this is usually where you break down. But as we saw on the bottom here, this descending broadening wedge is actually the opposite type of pattern and represents a bullish movement. So many times when trading, I think you can really get a great understanding of what's going on by studying the charts. You know, we're a huge fan of a lot of the work that Nassim Taleb does, in particular his books around mathematical principles like anti-fragile, black swan, fooled by randomness, and so on. And what I really like to recommend here is skin in the game, not just as a book, but as a reference for trading. If you're learning how to trade, it's always good to put some skin in the game. It makes your responses to the markets much more actionable. And there's something to be said about understanding that, because really what we're doing here when we're charting is looking at emotional sentiment. So we saw this descending broadening wedge. Again, you can find this information. We're going to start producing more of this stuff on the Arcane Bear website, so that's easy for everyone to access. But you said ascending broadening wedges, and descending is the one that we're looking at here. Again, it's the inverse, but still a bullish target for the breakout. And what you can see is A, B, C, D, and then this half test and then out. And this is Bitcoin pretty much printed that perfectly. A, B, C, D, half test, and then it broke out. Again, now the question is, are we at the bottom? How much further can this breakout go? Well, currently on the 15-minute, we're testing what's known as the 200 simple moving average from our bear cloth. So these indicators we give away for free. You can get them by following us on TradingView and downloading on the outside. So a 314 and a 200 move is a range around 8 to 9,000 here, which you would see in this target above. I do suspect we'll probably fill that. We're going to see the markets kind of recoil, I believe, in a positive sentiment for the next little while. We have been getting good news out of China from my friend, as well as from other people in these markets. Now, we suspected that this would be the case. We had actually long suspected that what we would see between April and May, it dies back down with the increased vitamin D, as well as UVA, B, and C rays, which help curb the virus's spread. Now, I believe we're going to see much more dramatic moves come closer to between the months of August and October. But in the meantime, I think we have reached somewhat of a bottom. Bitcoin can go lower, though. And let's take a look at that now. So what we're doing now is we're going to zoom out to the daily chart. For those of you that have been with us for a long time now, you do know that we were looking at the bull flag that was breaking out here. We've been watching it all the way since back here in July. We saw wanting to right around the 48% retracement mark, which is what you'd expect from a bull flag. We then saw this massive ascending wedge, which was a key indicator that we were going to break down. And this was leading into the coronavirus pandemic data. Right around this top here is where we started to talk about the importance of hedging your bets, and at the very least to protect your portfolio by using leverage or margin trades. And here we saw almost a 20% drop in Bitcoin's price. Now, there are two key indicators here that we could go lower. One of them, let's see here, let's zoom back out a little further. Testing the top of this parallel channel here on the bull flag is very likely at this point. that would be around 69 to 6,800 on the traditional markets. One of the reasons being is if you have the fundamental sentiment change, like a pandemic, a black swan that could come up from out of nowhere and drastically affect the way everyone does business, regardless of what culture or border you happen to be in. This is going to affect all of the markets. And that's when we started to lump, is that a lot of people thought Bitcoin would be an asset that would be a safe haven during a collapse. It would not be a safe haven during the collapse of the stock market itself. What it would be a safe haven is the collapse of the fiat or the US dollar system, the ability to send money across the world via wire transfer, banking rates, whatever it might be. And this is what we saw recently was a reaction from the Federal Reserve to lower interest rates, which essentially means you can take loans out with no real need to pay them back, essentially. And that's important for Bitcoin. So when we see the S&P 500 breakdown, that's going to bring Bitcoin with it and gold as well, because these are considered assets. But people need cash to survive a pandemic more than they need an asset. And I do believe that we have further to go, but I believe we've, at least for the interim, reduced the carnage that we're going to see. I suspect we could see a bounce up here in the S&P 500. Let's take a look at it on a broader spectrum here. Where do I think we'll go in the future if the pandemic continues? Probably all the way down to 126 points, probably all the way down here. This is where I suspect we would go if the pandemic continues. So that we're not going to get confirmation till August or October. So let's ignore that particular bottom for now and look at a much more interim suggestion here. If we go to the 4-hour on the S&P 500. And again, what we're trying to do is gain the bottom standing of where Bitcoin might be. So we have to look at other assets which are reacting similarly. Again, big 20% drops based off this fundamental change in the way people do business. I believe we've reached the interim bottom for the S&P 500, which would essentially erase an entire year's worth of gains, right? So back here you have 2018, 2019 in between October and February. Again, we saw a massive spike down below, but this area has become a fairly strong support area around the 272 point for the S&P 500. Again, the reason why this is important is because these assets are correlated, at least for now. With Bitcoin, we do have the halving coming up, and this, I do suspect, will bring us back to the top of this channel. Whether we break outside of this channel or not, I believe is going to be highly interdependent upon the way the markets go. The Fed lowering rates, starting to print more money, this is all bullish for Bitcoin in the long term. Even in the short term, we know that one of the reasons why Bitcoin's price has gone up is because they've just been printing a massive amount of money. I think this is important to understand when trying to trade, or at least learn how to protect one's assets. And I think that's one of the most important things that people can do here is, if you aren't going to be a day-to-day trader or swing trader, learning these types of patterns is extremely valuable because you can make larger market sentiments without being emotional. And I think that's often what happens is people get very emotional. Now I'm going to show you another broadening descending wedge. Here we are on Matic on the daily right now, and I'm going to scroll in here on the 15-minute, and I'm going to show you this pattern that we saw repeat. Because again, when you're educating yourself about trading is look for these repeating patterns and understand how you can use them to your advantage. How to trade a broadening wedge. Look for the lower highs on your E, and then look for the second line retracement, and then the breakout. And that's pretty much, again, what we saw. We saw a test at the top of the line here, didn't go all the way down, and then we broke out. Now this unto itself, even if you entered here at its top, was a 6% gain. This is a huge move in terms of day trading. If you're able to catch these spike bottoms again off Matic, that's almost 12%. That's a fairly drastic move in a very short period of time. So knowing these patterns as a day trader are important. As a regular investor, not that important unless you like to be educated about what's happening, and more importantly, I think, what this means. These wedges are not just technical patterns. What we're really trying to understand here is the emotions of the people. Now, I did something really stupid, and I took out a trade on Matic here around 290 or something, and I was being silly. I was kind of sick, and I didn't hit my stop. I didn't enter a stop loss, but I knew this pattern. And first off, the stupidest fucking thing ever is to ever enter a trade without goddamn risking stop loss in place. Like, I scream it all the time, and I don't know why, but for some reason my better judgment lacked, and I entered that trade without a stop loss. At that moment, I went out to the beach. I went walking with the dog and a beautiful woman, and I totally fucking forgot that I was in a trade to come back home to find what was this? Almost a 15% loss, 12% loss. Like, oh my god! And I felt it in my stomach. I felt that gut wrenching. And I thought to myself, holy fuck, I haven't made this bad of a trade in 7 years. And I remember the last times I had done this, when I had done something so stupid that it had cost me like a significant amount. And that feeling in your stomach is something that I had forgotten about. And it's something I think a lot of people should pay attention to. If you start to feel a pain in your stomach, whether it's positive or negative, for the price of something, you can almost bet we're damn near close to the bottom. These physical reactions to price sentiment are really what we're trying to chart and really what we're trying to understand. Where do we hit that point in the threshold of someone's emotional fortress, right? Where do we hit that breaking point? And I felt it here, and I'm like, oh, right. Remember, here's a descending broadening wedge. We're going to get a breakout. This again puts me much closer to. Again, you never trade like this, ladies and gentlemen. This put me much closer to my original stop loss, anyways. And then I closed out my position this morning with only a 3.5% loss. Much better than the 15% loss. But again, this is why understanding the sentiments can make you a better trader. First off, everybody ever trading, don't not use a fucking stop loss. Like, that was the dumbest thing I've ever did. I've yelled that from the rooftops for so long, and to have not done it, just, I think what I got out of it though, and this is why I'm reiterating this data, is because there was something very important that I had forgotten about, and it was that feeling. It was that feeling of loss and that feeling of, oh, I fucked up. And that's a very powerful feeling. If you know that you fucked up and you know how to fix it, you won't do it again. And I hadn't felt that in years. I actually think I needed it. That's why part of me looks back, I'm like, oh, maybe I was tricking myself into learning something valuable here because I had forgotten what that felt like to make a shitty trade. Anyways, the point of this is I do want to finish this off by answering a few of your guys' questions. I do believe we're going to see a bullish jump in intern here. Again, even with the broadening wedge on Bitcoin, we did something very similar to Matic, although this was a much more eloquently produced broadening descending wedge here. We did see the exact same ideas right back out to the 200, a simple moving average on the 15-minute, and then the same with Matic, right back out to the 200. Simple moving average. It's very likely that this will actually go higher, both on Matic and Bitcoin in the very short interim. I would suspect around 82.50 by the end of the day, as long as we don't close below the 200 moving average. So again, even if you guys aren't trading, I think you can learn a lot about these types of emotional markets, but you will never feel the markets unless you have skin in the game. Whether it's a mistake or profit, you just don't get the same reaction. And there's something to be said about noticing the difference between the two. You know, if you make 2 times your money, it doesn't feel anywhere near as noticeable as how much it hurts if you lose 2 times that money. So I think skin in the game is a very important, it's a great book by Nassim Taleb, but it's a greatly important concept for being to an individual trader. I do suspect they react somewhat similarly, that you have thresholds of loss, and they're categorized as differently depending on the amount of exposure that you have to each asset and what the assets are building up in terms of these types of patterns, etc. So again, use this data to better inform yourself. There's so much to be learned. It is a never-ending process. I really like charting and trading. It's one of the reasons why we started the Private Bear Group, is because I know there are other people that are doing this exact same thing, and we're always stronger when we can look together. When we look at the same thing, we're like, are we seeing something different? Oh, maybe this is a wedge versus a maybe this is a Buddha pattern, etc. So what you get is not a confirmation bias, but you actually get a mentally sound group of people who are able to contrast what you're seeing and give you valuable feedback. So I've been super excited about the Private Bear Den. Hats off to everyone out there. Again, you guys, if you'd like to, you can join our private newsletter. We've got a private group. We're working on bringing all the private calls back, although they're not calls. They're more like, hey, this is the descending broadening wedge. And we did that yesterday for free on Twitter for Bitcoin. So feel free to follow us on Twitter. We drop info out there quite often as well. If you want, you can go to this. Where was it? Thank you guys for all following us on Twitter here. There's a bunch of comments I didn't realize that I didn't get to. I apologize for that. Maybe it'll just be easier if I go to my profile. Follow us here at Arcane Bear, ladies and gentlemen. There it is, the descending broadening wedge, both for Matic and Bitcoin. And here you can see before it broke out, this interim breakout and the first target. The first target was based off the B wave. And again, if you go back, that's actually what we saw. It was this beautiful B wave sentiment right across the top of the line. And we're looking for the secondary targets on how to trade these descending broadening wedges. Again, the second targets would be above that. Here you go with this piece, this information above. And then again, the information of what it looked like before it broke out. Again, we saw the same thing with Matic yesterday. And the reason I did this is because I knew I had no other choice but to wait through that moment where I'm like, oh, I fucked this trade up. Like, I got to ride it out. And then there we go. I wrote it out, closed out at my regular stop loss, and used it as a very educational experience for myself. So I'm grateful to have those, even if they do sometimes hurt and cost. That is the cost of learning. It has always been the case. So again, follow us on TradingView, follow us on Twitter, join our private newsletter if you feel like it, whatever works. But do it if you don't feel like it. No, that's not right. No, don't do it if you don't feel like it. Yeah, that's what I'm saying. We don't want people that don't want to go through the process of learning in this group. It takes effort, it takes losses, it takes the understanding that there is no perfect trading strategy. And so many people I've seen join these like call or trade groups that just end up losing money because they don't actually know how to trade effectively. So they'll enter a trade, they'll hope for the best, they'll miss all their targets, they won't have had a stop loss, they won't have taken even a small amount of profit, and now they're in the shitter hoping that the price comes back. Anyways, how to stay alive, keep breathing, and enjoy what you have. It's always a great way to live. More than just staying alive, I think it's actually these times about being present and living with where you are. Oconomex 22 says, all is normal here for the most part, but hearing more and more cases around Atlanta, and even some schools are closed today. Yeah, this is going to likely put a big dent in our regular day society. I do believe this first wave is going to appear somewhat mellow as in comparison to with what we get between the months of August and November. I do believe that is going to be significantly more profound, and it is going to be a worse wave of the epidemic. So I'm preparing now for August. And I think what we see now is still going to be rough. We have a bunch of cases in Costa Rica, and I do believe they're going to continue to evolve and develop. Last question here. Master Your Wrecked Mind says, on which time frame do you chart? I look at all of them. Again, the smaller time frames are for shorter term trades, right? You don't make a year-long decision off a 15-minute time frame or a 15-minute candle, right? If you are looking for a long-term investment, you look at the bigger time frames, daily, weekly, monthly. If you're looking for an intraday trade, you look at the 15-minute to the 4-hour, something that may take a day to progress these types of trading patterns and charting patterns. So really, the time frame depends on your market focus and sentiment. Are you interested in effectively trading just for the day, or are you effectively interested in trading for the next year? And you try to figure out where you are based off those higher time frames. That's probably the easiest way for me to explain what time frame you'd use. But if you're just learning, go through all of them. Look at the 1 second time frame. It even has it. It's fascinating to watch things move quickly, and it teaches you a great deal of information about how some of these indicators work on the shorter time frames. Much less reliable. And that's the other thing I think I'll point out here, is that please note that every time you get on a shorter time frame, some of these patterns are very reliable. Like a ascending or a descending wedge on a bigger time frame can be very reliable, especially on the daily or the weekly. If you have a descending wedge, very, very reliable. Whereas if you're charting it on the 15-minute to the 1 hour, you lose a lot of the statistical significance on if I can make this trade reliably or not. And I think that's important to remember, is what time frame you're in is going to change the reliability of the patterns and the indicators that you're using. Day trading is a hell of a lot harder than long-term swing trading. We've been watching Matic for a while bounce up against the long-term trend line, and then all of a sudden there was a 60% gain. Whereas now, even when we're trading Matic on that last, we were looking at the 15-minute time frame because I was trying to show you something that evolved over the course of yesterday and will be probably out. It will be of no use to us over the next few days. Anyways, we'll leave it at that. Thank you guys all for your support. Remember to give us those thumbs up if you like this content. If you don't, give us a thumbs down. Leave your comment. Tell us what you didn't like. Tell us what you did like. We always do our best. Sometimes if you guys just report random information, I just block comments. I've had so many people say dumb shit where I'm just like, you know what? You've lost that ability to talk. No, we're not passing you the torch anymore, because it's just not helpful. I really try to only leave valuable comments and content for people on the channel. And yeah, I mean, it's just the way it goes. It's easy. At one point, I even considered just turning the comments off because of how ridiculous some people feel the need to type. If you feel the need to be, look here, I'll give you guys a cent for all those haters out there. If you feel the need to type a bunch of shit, just go start your own YouTube channel. That's what I would suggest. Just pick up a camera and tell everyone how you feel. Maybe it'll work out fantastically for you, and I'll be a fan of your show. Who knows? Steve with the Arcane, I'm signing off for the rest of the day. I love you guys. Love your family. Share everything that you can. These moments are precious and valuable, and we'll see you guys again on the other side. Oh.